But first, we want to get to some breaking news that we got out this morning. The University of Michigan consumer sentiment coming in above expectations. 70.1 was the index's print. That was exceeding the expectations that we were expecting of 69.4. Also a further improvement of what we had seen that prior reading here of this. So what does this indicate? Obviously, consumers a bit more bullish, a bit more confident maybe of where things stand right now. And digging into some of those projections, the expectations index rising to 74.4 versus 72.1 the prior month. Also, the expected change in median prices during the next year, that actually fell to 2.7%. That would be looked at as good news here versus the 2.8% last month. But Maddie, when you take into account what ultimately this means here for the markets going forward, obviously higher consumer sentiment or a better, feeling amongst consumers, not necessarily a huge surprise given the fact that we did see the Fed cut by 50 basis points, but at the same time reiterate the fact that they were confident in a soft landing.
That's exactly right, Sean. I think it's interesting that this latest data here coming in basically in line, and you can see, of course, stocks still moving to the upside off of that. But what I'm still looking at is from that PCE print earlier this morning, the Fed's preferred inflation gauge, we did see slowing income and slowing consumer spending details under the hood there. Could that be a risk to the market? It points to this broader big question that we've all been talking about. We're kind of on this knife's edge of either, great bullishness, growth for the rest of the year, rate cutting party, or maybe some signs of weakness.